Good morning. Welcome back to another Market Open live stream. We got ourselves a little bit red today. That might be a little bit of an understatement. There's definitely some red in the markets today. I want to start with a quick update here that we just had a data release that there was a 21% increase in personal incomes. I pulled up this particular chart here, which take a look at this. See if you notice a pattern in terms of when personal incomes skyrocket. Oh, look at this. Somewhere in April, somewhere in January, and then in March. Oh, yeah, right after stimulus checks. Each time did you have personal income skyrocket. You also had, personal income's up 21% in the month, and then this is the personal spending line here. Take a look at just the association with higher income through potentially stimulus, which certainly aligns here, given that this is when you had the stimulus rolling out, and higher spending in those months, potentially suggesting that, certainly the numbers will come down again, but that they'll level out again, which, back to these lower levels, which we kind of saw last year without the stimulus boost. So the stimulus boost really doing something incredible here in terms of at least manipulating the chart, that's for sure, which who knows exactly why the market is fussy today, but maybe the market's thinking, oh, well, is it only stimulus? Is that the only reason the economy is doing decently? Who knows? But what we do know is that Microvision is down 22%, which is a lot. You got a momentum play here that I think there was a whole lot of excitement over, maybe when Microvision reports earnings, they'll also announce that they're being acquired or they have a new partnership. Yeah, no. Microvision has been suggesting that they've been looking for a new partner for years, and nothing has changed. There's still a massive lack of revenue in Microvision, and the stock is a momentum play. So you got to know that when you're investing in it. Twitter's down 13.9%. This is on weak guidance. This is very much the same pattern we saw at Enphase and Pinterest. Beat earnings, but guidance hurt. And that's exactly what's speeding up Twitter today. So we've seen this pattern before. NGA is down 5.19%. BTX, the pharmaceutical company that was up substantially, down 21% yesterday, down 9% in the pre-market now. Vuzi, Ocugen, Arclight, Open Door, Desktop Metal, all these guys down in that 4% range. Nano Dimension, Skills, Silver Spike, Neo, all these guys down a little over 3.5%. With in the lower threes, we've got Canoe, Churchill Capital, Luminar, Fubu, and Tilray, all losing right around 3%. IPOE's down about 275. For gainers, at least in the pre-market, we do have Naked, a momentum play, moving up about 9.8 with Newell, Marathon, Amazon, Marathon, and Riot, if I didn't mention. Right. Where's Riot? There it is. There's Riot. All these guys up slightly here. We've even got Ford up slightly at about 1% up, but the biggest mover here is Naked. Most things are red today. I would say almost everything is at least somewhat red today, including some companies that just did phenomenally over the last few days here, like the Cheesecake Factory. Also did very phenomenally when they posted their earnings. Let's go ahead and listen into Kramer for a moment. We'll pull up the terminal as well.
If you can find anything, whether it be IDEX or if you look, you can go all the way to Elanco, which I think is making a major comeback. But I am just in awe of anyone in the pet business, because that is just the one business that continues to grow, because we saw a lot of people buy pets during the pandemic. And the ultimate one, I think, will be Chewy. I think Chewy.
Those expenses don't go away once you have a pet. This is very true. We'll take a look here at the 10-year now that I've got it up. A little bit of a there we go. A little bit of a flattening at the moment. We'll see if that persists, but let's zoom in a little bit here to the 3-day. This is really weird. So you've got you had that spike yesterday. going up to about 1.69 almost. And we're continuing this reduction in yields. In fact, I'll hide myself for a moment here. Look at that. You're continuing to see bond yields go down. It just an odd correlation now as you're actually seeing the market move down with those bond yields. So very strange. Keep listening here.
It is a superior consumer packaged good company that also has this great pet food kicker, and I really love it. If you want to take a little more speculative, you go with Newell Brands, which had a very big upside surprise. But for the most part, this group is disappointed, and it's just not where the action is. Where the action is tends to be on a day-to-day basis, switching around. It's not technology today, by the way. Technology very weak, and including what we're hearing about Apple. You know that is. You don't want to be in Apple's shoes right now. People are taking shots at you. And I think that Apple's a great company, but you got to let that stock come down too.
Yep. We want to play a little bit of sound from our conversation earlier in the week with Daniel Ek. I don't know if we want to save that for after the bell, but
Sure.
The general point this morning is that that Apple's being a target once again by Marguerite Vestager, Jim. It's mostly about this complaint that we got from Spotify a couple of years ago. Apple's response is, look, these players want all the advantages of being on the App Store, and Spotify became a giant because of it, but they don't want to pay for the privilege of being there.
I love the Spotify has become the largest music subscription service in the world, and we're proud for the role we played in that. I think I love the irony of this. Look, who knows where this goes? But what matters to me is that
here we go on the opening bell. Let's see how red it is today.
And I think it's going to be another opportunity.
Wait for those to start trading here. Here we go. Oh, yeah.
Everybody knows it.
It's pretty red.
Down tape. I think that there's opportunity near the end of the day. We've had some very good opening of each month. Obviously, May's more challenging just because of the Diddy sell in May. But I don't know. I think the market's over reacting to negativity today. It's just not as bad as people think.
No, it's true. The last 3 months, a lot of the technicians have taken note of weakness in the back half of the month.
Yes.
They thought it was going to come this month, Jim, and it didn't really happen the way they thought, notwithstanding the weakness on this final day.
Yeah, I mean, I look at Skyworks, and people are complaining about the gross margins. They just made this fantastic acquisition. They're moving to be not just cell phones. They'll be
pull off Skyworks, but wow. Yeah, I guess it is. Oh, hey, tomorrow's the 1st already. It's amazing. So, in the next 24 hours, we need Dogecoin to hit $1 because we have a bet going that if Doge doesn't hit $1, I have to shave. Right now, we're still at 31 cents. We have Bitcoin at 54,900 and Ethereum at 2748. Ethereum really kicking butt here. Amazon up 0.9%, but still red candles sticking off the open. Despite this incredible beat yesterday, stock was up 5% at one point in the after hours, now up only 0.95%, about 1% now. It's basically doing the same thing that Apple did. Wouldn't surprise me for it to go negative here in the day. Mind Medicine up 0.84%. ChargePoint up fractionally here, but we do not have a lot of green stocks. At 13%. Marathon is up. Marathon, Riot, Playboy, Nokia, Target, Amazon 1.2 now. Okay, GameStop. So some things up, maybe 0.5% here, 0.5% to 1%. So it looks like some things trying to turn green here. On the downside, even Microvision's trying to turn green, now down a negative 18%. Twitter's still sitting at 14%. Neo is falling a little bit upon the opening. NGA is greening a bit. MP is mixed. Churchill Capital got some green candlesticks, but still down 2.75%. Desktop Metal, same thing, down about 2.2% green candlesticking though. And Pinterest, Pinterest a little bit mixed here, with Etsy also a little bit mixed. Let's keep going down to, okay, we covered these, and yeah, here we go. Trying to look for some momentum today. Zom all of a sudden pushing here just in the last 2 minutes. Really getting on the chart here as being up about 2% for the day. And makes you wonder, is Zom going to start being one of the runners today? We got some large candlesticks, so be careful. You got a lot of folks that are trading that are looking for entry points, and sometimes you see these brief little takeoffs. Sometimes they last, sometimes they just sputter. I'll can always do some volume analysis. It's one of the tools that might help. But then again, be careful. Even though Naked was up substantially, it's now red candlesticking, with Playboy doing the same. Moderna up, Dave & Buster's up. Amazon can't figure it out. Lyft is green. BNGO is nicely green today. Yeah, it's actually very nice building pattern so far there on BNGO. We'll see how that goes. Tattoo Chef up barely, 0.1%. Twitter not as bad as it was. It's down 14.4%. Microvision did slow down again there, down 19%. Let's go listen into what the mainstream's saying.
Learned a lesson, for lack of a better phrase.
No, they don't seem to be able to learn anything. I think that though they'd rather buy an Alexa than they would buy a stock, because I think that they realize that it's fraud. But the hardcore people, I don't really believe that there's 10 million people on Wall Street Bets, frankly. I think there's 7 people, and all they do is invent new names. And they keep recommending AMC. Look, Microvision was a company that, they did something like $400,000 in sales.
That sounded really dumb, Jim.
Pick. I don't know how they make up this stuff. They do have a great time. I have to admit they have a great time with their little names, taking them up, enjoying themselves. I think they should actually watch Warren Buffett this weekend. It might be revelatory for them.
That is going to be interesting. Buffett and Munger this weekend. Of course, we'll be paying attention to our Becky Quick, who's going to help drive some of our coverage on that over the weekend, Jim, as we get his sense of the economy and inflation and asset prices. I want to Chevron's lower on the Dow, the worst performing component. Exxon is Darren Woods was on this morning, Jim. He talked about the discussions with activist investors, Engine Number One and D.E. Shaw, about this ongoing debate about how they are going to transition the company.
Okay, we'll pull off CNBC here. Big old slam there on Wall Street Bets. Let's go see what Fox has to say about this.
Winners. Show them to me, please. Headed by Aon Corporation. Nice gain there, 4%. I don't really know these as big name companies, but they're all up 3-4%, top of the S&P winners list. The NASDAQ Composite, headed by Vertex Pharma. I don't know them, but Amazon, of course, is in there, and it's up $38, 1%, $3,500 a share. That's Amazon right now. And then we have Endeavor. That is the parent company of UFC, Ultimate Fighting Championship. Got that? They made their debut yesterday. But the bigger news may be who joined their board.
Yeah.
I got a pretty good idea. Go ahead.
Well,
tell
why
us.
don't you tell me how they got Elon Musk on their board? That's what I'm wondering. It's the only board seat that he has in a company he didn't create and isn't the CEO and founder of. So that's a big check mark, big plus for Endeavor, which just had that successful IPO and debut yesterday. Endeavor also owns William Morris, which is a talent agency, and it's now worth $10 billion. And we have that kind of star power and that sort of innovation power like Elon Musk on the board. I think that gives a lot of confidence for investors to buy in.
I guess I'm just surprised because I always think of UFC as a kind of not the home for liberals. I don't know why I say that, but I just don't feel that liberals are big on Ultimate Fighting Championship yet. So I don't understand why a liberal like Elon Musk should be on the board. And I think he is liberal.
Yeah, you really think so? I think he's very capitalist. Remember when he fought the Alameda County to reopen his
He's
plants?
a climate nut. He's a climate nut.
Does that necessarily make you liberal if you're pro-climate? Well, he was anti-coronavirus and COVID and lockdowns.
It's a signal. All right, Susan, we're out of time. The producers are killing my eardrums here. Hi, who is teaching?
Okay, then let's pull off of this. Let's give Bloomberg a little bit of airtime here. Let's see what Bloomberg's saying.
Yeah, the risk to upgrade. That's a new term, right? That's something that we've been throwing around a lot lately. And on the stock split side, I actually double cut my pizza last night just so I could really get the feel of what it feels like to be an equity manager.
Matt, you don't want me to get started, Matt, so don't get me started. Carry on.
I just wanted to get you going a little bit. I know it's Friday, right? But for us right now, the fundamentals cannot get better. We are seeing exactly what Jay's talking about. Earnings are coming in at record levels. The fundamentals are improving. The pendulum has swung back, and you're going to see upgrade after upgrade. We're calling this the year of the upgrade. And with that, you're going to see rising prices in high yield. And it's also really good for investment grade. Valuation, yes, they are stretched, they are tight, but they are warranted, and we are going tighter.
How much tighter can we go? Matt, just look at things right now. Things are super, super tight. We're through the previous cycle's tights already at this place in the recovery. It's unreal.
It is. And, I think we could have a little bit of a pause near term because for the month of May, we're expecting a huge calendar, probably anywhere between 120 and 150 billion. So technicals near term will be a little softer. But the demand from Asia, the demand from Europe is unbelievable. Every single night we are getting emails out of Japan, interested in investing or actually investing in USIG. Literally every single night. I've never seen anything like it before. And so the technicals on the buy side or the demand side are extremely strong. And if you get any sort of slowdown in sort of supply and you get these improving fundamentals, I think it just sets up for lower tights than you had in 2018.
Jay, things are pretty well set up right now for this market. And already we're talking about peak growth. Peak growth as a concept is something that I think we need to debate just a little bit more for this cycle specifically, Jay, because just the mechanics of this cycle, we had a mandated recession. We've got a reopening. Mechanically, that's going to lead to huge year-over-year growth, huge peak rates of growth up front, quickly. And Jay, I'm not sure whether that's an appropriate concept for this cycle going forward. Peak growth is not peak earnings. There is an important difference.
I would agree completely, John. I think you nailed it. Look, the market has shown us that it's looking through this. And I expect, point from John, is I expect that market to look through the inflation issue as well, right? Because that's the concern, not talking about it right now, but that has been the concern over the last couple of months. I think the market is going to see inflation numbers higher than what we've seen for years and years as transitory. And so the real question becomes, what does this look like post this transitory boom in numbers that we haven't seen before? It's too early to tell, but I do think you can look at companies, you can look at markets, you can look at sectors that have been laggards in the reopening. And so looking outside the US in particular, and maybe even places like Japan and old style EM in Latin America as opportunities here, because we are going to see a carry through for at least the next 18 to 24 months in terms of the global economy. And that suggests lots of upside for the places that have not yet participated because of poor vaccination policy, et cetera. As they move forward, and Europe is the prime example right here, I think the opportunities continue. So to be a global multi-asset investor at this point, focused on thematics, is not a bad place to be at all.
Jay, we'll continue that conversation in just a moment. Matt, I want to give you the final word in this segment. Things are set up really decently. We've been pricing it for the last 6 months. The challenge begins when we go through this huge bout of acceleration. To Jay's point, we get through the first 3, 6, 9 months of this story, and we start to think about what the rest of the cycle looks like. Is it shallow and stable with some bumps along the road like the previous cycle? Or is it messier because things tighten up so much more quickly than policymakers anticipate? If you had to make a cycle call right now, Matt, and it's tremendously difficult to do, I know, what would it be?
So, I think we're setting up for a game of chicken this summer between the Fed and the markets. And the market is going to cause the Fed to at some point at least acknowledge that this is picking up and it's really hot. So the volatility around that, I think will pick up this summer. I think interest rates are going slightly higher from here, but credit is still really supported and companies are not doing dumb things yet. And as long as they're not doing dumb things, we really do believe that you're still in a very good cycle for corporate credit. But interest rate volatility is going to be picking up over the near term. Yeah,
this summer is going to be interesting. Matt Brill, it's good to catch up. Jay Pawlowski, sticking with us. Coming.
Yeah, I mean, not untrue. I mean, that's kind of what we've been talking about. Is nobody really knows, and that's the scary thing. Nobody really knows what's going to happen with rates, and there's the Fed's version, and then there's the anti-Fed version. But, short of those two versions, all we've got is uncertainty. And it's very frustrating and difficult to be an investor in, because you do get these crazy volatile days. Think you're making a good fundamental bet. Doesn't matter these days. The stock market's got a mind of its own. Let's go back to the sticks here. Let's take a look. Microvision still down about that 18%. Twitter down 13, so we're covering a little bit. Mind Medicine down 6. NGA's down, Pins down, XPain, these guys down about that 3%. Churchill Capital recovered a little bit here, was down more. Now it's down about 1.77%, which begs the question of where Tesla is. Tesla is down about 0.75%. And Marathon Digital actually running now. Let's go to, there we go. Naked up 13.9%. Marathon Digital up 5.4%. Keep in mind, it does look like Naked will be on CNBC, or the CEO of Naked will be. Sometimes that could lead to a little bit of that CNBC pump and then subsequent sell-off. Bitcoin just went over 55,000. Look at this run on Bitcoin just since the market opened, up about $600 just in the last few minutes here. Domino's Pizza up 2%. Nope, Zum couldn't get it going. Zum had a very exciting start, but oops, sorry, hold on. I had actually clicked on forward. There we go. Yeah, Zum had a very nice, exciting start, but did start to fizzle pretty quickly. So we saw a quick U-turn there. We'll see how the rest of the day goes. It's obviously been a so far. Cheesecake up just under 1%. Tattooed Chef's actually done better. Hold on, let's get this news here. Up to about 0.7 now.
It's just stratospheric at 21.1%. These numbers go all the way back to 19.
Yeah, this is where we opened with.
We've never had a higher number. Now, why is that so important? Well, because it really goes to show that all of these stimulus checks, of course, are getting in the pockets of Americans, and it's really bolstering that side of the equation. Of course, much of that money is going to show up in the economy, and that's what all these numbers that I bring out every morning are going to start to demonstrate. 72.1, 72.1 for Chicago PMI. We're expecting a number around 65. Our last full month, March, was 66.3. The last time we had a number at 72.1, well, you're going to have to go back to December of 1983 to find a higher number, which was 75.0. So this is really a biggie. Now, let's go back to the charts. 24-hour chart of 10s. You can see there that we're hovering right around 160.
That is actually a pretty big beat on on manufacturing growth. Really good. And anything over 50 in that signal is expansionary. A little bit slight tick to the upside, like we just saw here on the 10, 1.6365. We'll see. Can we get back onto that downward trajectory, or are we going up to 1.8 and eventually 2% on that 10-year treasury? We'll see. Market's obviously pretty dang mixed today. Let's jump back on over and see what Fox has got for us this morning. Is this the border wall?
Immigration reform, but they also have an expectation that you're going to secure the border, and we can do both. And so,
yep, it's the border wall. Okay, all right. Let's see what Bloomberg has then.
Expanding for 3 straight quarters off the back of strong job growth and stimulus tailwinds. Some breaking economic data this morning, and might be key. The numbers have been stellar.
The numbers have been stellar, and we get another one from the Chicago Purchase Institute. It comes in at an almost unbelievable 72.1, up from 66.3. And that's a little bit of a surprise in a way, because normally the Chicago area is home to a lot of automobile manufacturing. And of course, that's been interrupted by the chip shortage. I'm just looking now, and this Chicago number is the highest since 1983. When it was 75. So the numbers keep rolling in. And as you said, John, it's a lot to do with the stimulus from the U.S. government. We saw incomes up by 21% in the month of March because everybody got a check. And that's not what's happening in Europe. You take a look at the GDP numbers that came in today for the European Union, and you can see the white line is the U.S., The green line there is the European Union, and they're going in the wrong direction, and they are not getting back to where they were, where the U.S. is getting much closer to the point it dropped last year. Here's some of the numbers for these countries, and with the exception of France, everybody contracted, and you look at what happened in Spain on a year-over-year basis, down 4.3%. It's tough for them to
even quarter-over-quarter contractions.
We've got the stimulus. They're still working on getting their European rescue plan together. Everybody has to vote for it. That hasn't happened yet. Sometime this summer, they might get some money out, and it's going to be spent over 2 years. So there's a big difference in government support, and there's a big difference in the way the economies are going.
Mike, I think we've all spent the last decade just doing that when it comes
Quick note that Chicago PMI apparently came in at its highest rating since 1983. Wow.
Your reaction to the data in America, phenomenal.
Yep, and transitory and really not worth paying too much attention to.
But Europe's data is, Jay. Why?
John, I love it, man. Why? I think because the divergences that we are seeing, both vaccination-wise and growth-wise, are at their wides, and markets are forward-looking discounting mechanisms. I think that process is actually speeding up and writing about that. And so I think we're at the wides. I think the divergence is narrow as we go through the next couple of quarters. Market have already discounted the recession, means nothing. Europe has been one of the best places to be in the world in terms of equity markets. Earnings were up 40% year over year, better than expected by 20%. Europe is cheap, it's cyclical, it's value. I think as we go into the reopening, we're going to see higher interest rates. That's going to jumpstart the second leg of the value rotation trade. You want to be invested in places like Europe, where I already am.
It's an interesting argument, and he's made this investing in Europe argument just previously. But if interest rates go up, suggesting that if rates go up, we could see the second phase of sort of the recovery trade. That's an interesting one. So, the reverse seems like it would potentially also be true, that if interest rates go down, you see recovery not do so well. It's interesting, and possibly tech much better, which would be along expectations. Let's keep listening.
I want to develop your framework a little bit so the audience really understands what you're talking about here, because in the first quarter, we saw some real divergence in the economy between Europe and the United States. We didn't see it in the market per se. European banks, as you point out, through the first quarter, through the year so far, up more than 23%. So let's talk about that a little bit more and develop the process a little bit further. You take the distinction between what is happening in the economy and what's been happening in markets, the spread between economic divergence and market divergence. You picked up on that. The laggards we're seeing outside of just the economic story, the laggards we're seeing within markets.
I just want to say the same thing happened last year, right? The economy was in the doldrums and the stock market was roaring. Now the economy's doing fine and the stock market's like, yeah, we're good. We already had our growth. That's gonna lead to some crazy volatility over the next year, certainly through September and October. Haven't said that one before.
China's had a 15% pullback, maybe starting to be interesting. The question is, the big tech, China, a communist country nominally, is more aggressive in reining back big tech than the capitalist America system seems to be. In Latin America, it's been just a mess, vaccination-wise, economy-wise, policy-wise, etc. But there's a price. And so you look at the Brazilian real as an example, it's starting to strengthen. That's telling you that the market has discounted everything. And now when you get that commodity continuation, the acceleration of the commodity bull market, you're going to start to pull along the equities that are associated, markets like Brazil, like Peru, like others in Latin America. So I think it's really interesting. Europe has been a surprise, not really to me, as you know, we've discussed.
Pull back a little bit here. Let's go back to the sticks for a moment. Just kind of see, it does seem like Twitter's trying to continue its recovery here. Mind Medicine is still falling, although bouncing at the moment, down about 8%. Microvision consolidating in the day here. Pins down. Well, we saw Pins at 66 yesterday as well, so down 2.8 today, but probably offsetting some of that growth at the towards the end of yesterday. USO 194. Matterport is down under 13 again. Not under that crazy 11, but certainly down under 13 again. We've got Naked up 17%. Here comes a little bit more of a rally. Remember that CNBC interview is coming up as well. I'm not sure that we'll be covering it when that happens, but CNBC will be interviewing the CEO of Naked. Sometimes that can have some large trade implications. You get more traders establishing positions and then potentially closing positions on reds thereafter. So good things to pay attention to. ZOM now up 5.88%. Good. We identified that around 1.5% up. Domino's 2.5%. Moderna 2.2%. We got Neo went positive. Wow, Neo went positive here, up 1% on Neo. Cheesecake 0.73. Lemonade, Snowflake, PaySafe, EXP. These guys all around 0.5%. Piton, but Piton 0.36. Where's Tesla? Oh my goodness, Tesla just went green. I mean, I'll tell you, this has got to be some of the most bizarre, uncertain market dynamics we've seen in a while. Like it's not straight down. It's literally straight down in Feb, and then now we're up, now we're down, now we're up, now we're down, now we're up, now we're down. And what's driving it is so unclear. It's crazy. It's really what it is. It's a symptom of uncertainty. And think about it. The way I kind of think about it is, imagine you're in a movie theater, and all of a sudden, part of the movie theater is engulfed in flames. The first 30 seconds, you're just like, oh my gosh, where do I go? Where's the exit? I can't see the smoke. Oh no, where's the exit? Like, you're gonna be fine. Chill out, relax, take a chill pill, and find the door. I don't know. I like that analogy because I feel like you've got you got that little that fire, and then the weenie babies in the back, like, oh no, this is horrible. Short, put, right? And the rational people are like, we're gonna get through this. Buy the dip. Making their way out of the movie theater on fire. Except it's gonna take till September and October to get everybody out, because the weenie babies are gonna be the ones we have to go back in to rescue, pulling them out. Like, get out. The exit's over here. No. It's bad. I don't know. It's the imagination's running. But I don't know. The visuals sometimes help me a little bit. Picture why I think there's such bizarreness in the market. When we have a visual of what uncertainty could feel like, it's kind of what we're seeing in the market. I mean, now things are going green again. It's very, very, very strange. United Airlines doing well, up 1.8% here. Tilray up 2.5%. Bitcoin's been running. I mean, it's just been running straight since we started the live stream here. Really, really incredible. Dogecoin, on the other hand, has not been running since we started the live stream. And Ethereum is kind of mixed, though there is one thing that is definitely running. And it's that 39% off coupon code you could use down below to join those amazing courses. We'll be doing the private live stream in our group in about, 2 hours? Yeah, 2 hours. Let's listen in Jim here. Take a look at that code expiring May 5.
To see some people there because it is going to be, we have, you know what, you can't have everybody there at the beginning, Carl, because you don't know whether you're going to have a full house. It's not July 1 yet, but I do hope to see you. There's an invite from the meeting you on TV. How do you like that?
That's actually an interesting analogy. That what Jim just kind of said. You think you got a full house, but basically the full game hasn't been played yet. You don't know what those final cards are going to be in that poker game, and that uncertainty drives markets down.
Yeah, Logitech, which is the way to be able to win when you're doing video games, and many other different. I want to talk to him about semiconductors, but many other different devices. And then, I think Linda Reynolds.
Apple now down 0.71%. Incredible.
What can I say? It is the time to buy a boat. You have the money, the discretionary money. Buy a 17-foot Boston Whaler like I have, and you'll look great. And have a great weekend.
Jim, we'll see you tonight. Yeah. Have a great weekend, man. Mad Money, 6 p.m. Consumer sentiment's on the way. Don't go anywhere.
Yep, I think this is a good way to put it. This market is an emotional roller coaster. Yeah. It's tough. It's very tough. I'd say the toughest thing for me is just the amount of short-term thinking that comes out sometimes in the YouTube comment section. Oh my gosh, toxic. And I don't know if it's just done because people are, looking for like a zinger of a comment. But boy, oh boy, have some patience. All of us are investing. I feel like, maybe I can't say all of us. I think the majority of us are investing for our future wealth and to retire early. And it's times like this that you want to have that straight game face on and be participating in setting up your future plays. The plays don't have to work out in the next week. They don't have to work out in the next 2 days. They got to work out in the next 2 years, 5 years, 10 years. That's where it matters. Tilray up 3%. Volatility is up 3.5%. Voyager Digital 3.75, sitting just below 20. Big Digital up 5.11. Riot and Marathon at Hut 8 Mining also moving. We have Microgen, which, keep in mind, I did have an interview yesterday with the CEO of Hut 8. Just want to make it very clear. I never accept money for interviews, and I never pay for an interview. So if there's ever going to be an interview, know that there's $0 changing hands in either direction. All right, what else do we have here? NGA 4.65 to the downside. SPAC attack again, maybe? Yeah, I mean, you've got Matterport here, very good food company, more SPACs. Etsy down 1.82, although that one's been bobbing. Gosh, Qualcomm even had phenomenal earnings, and they're down 1.51%. Just, this is like the most bizarre earnings trade I've seen in a while, where it's the things that are crushing it that are actually not doing that great in the market itself. It's weird. It's just, even though we saw what expectations were, I guess the market's like, yeah, well, maybe we expected a bigger beat. Like, that's cool, Apple. That's cool, Amazon. You guys had really good numbers. That's weird. Very, very, very strange. All right. Let's see what else we got. Let's listen to Varns for a moment. Nope. Can't listen to Varns. Can't listen to Varns when they're on commercial. Well, let's go Bloomberg then. Also on commercial. Okay. Phenomenal. Let's look at the 10-year. So 10-year, 1.6437. Let's pull up the 3-day of the 10-year so we can get a closer look at it here. Take a peek here. We've got a little bit of a bump here on the 10-year. That could be because of the University of Michigan 12-month inflation forecast just coming out at 3.4%, which my guess has been 3.5% for April. I'm looking at 3.5% for April year over year. We'll end up seeing what happens soon, though. In fact, I'll pull up the date. Let's listen in here.
Listen to this. Chicago PMI, that is a measure of manufacturing activity in the Midwest, just hit the highest level since 1983.
Well, it didn't just hit. It hit like 30 minutes ago. So we're going to jump on over to CNBC then. All right.
Find a bigger number. And if we look at current conditions, 97.2
Nice.
and 82.7 for expectations. And that follows the mid-month 79.7 that gets tossed. So other than current expectations, which remain exactly the same as our mid-month read, there were improvements. Now on the inflation front, some surprises. On the one-year inflation, it moved from a mid-month of 3.7 down to 3.4. This is significant because 3.7 would have been the highest read going all the way back to March of 2012. So this mitigates that to some extent, and a lateral move on the 5 to 10-year inflation, which remained at 2.7. And if we want to try to put a face on that, it was 2.8 final read in March, and 2.8 final read in March was the highest since August of 2014. Morgan, back to you.
Rick Santelli, thank you. We are keeping a close eye on Amazon and Twitter. We're going to get to both of those in just a moment. But first, here are 3 other big movers that we are watching this morning, 30 minutes into the trading session, starting with Clorox.
Okay, we're going to pull down here. I want to take a peek at the 10 here. Take a look at the movement here to the upside, this 1.64, and this coming off these latest data releases apparently. But also, folks, write this down, okay? You ready for this? This is what you want to put on your calendar right here. Mark your calendar for May 12th. That is when we get the next CPI data release, where we're going to see these 2 months right here are going to be some of the worst year-over-year inflation headline numbers. I'm expecting 3.5% and then or potentially 3.6% and then 3.5%. That's correct. So I'm expecting 3.5 here for April. I'm sorry, 3.6. Let me get this clear. The higher number first, then the smaller number. 3.6 for April, which gets released May 12th, and then 3.5 for June 10th. These are going to be some of the big base effect moments. So mark your calendar for May 12th. I'd expect volatility leading up to this. Also, I mean, as we expect inflation there, the pricing on those programs linked down below, which you can bundle up, does go up as well on May 5th. See, this is inflation. Let's keep going.
The stock nosed above where it traded on September 2nd. It's been months sideways. It doubled, in the year before that. But what now, valuation-wise, gets you excited incrementally based on these numbers?
Yeah, I mean, like you said, they crushed the first quarter numbers. Everyone was concerned about the 2Q guide. That was better than expected, right? I mean, the 2Q is the first quarter of lapping the pandemic surge from last year. Revenue guide was strong, 28% growth at the high end. That was above us.
All right, we covered Amazon earnings yesterday. I'm going to pull off this and take a peek over here. Marathon up 8.64% with Naked up 17. So Naked's moved nicely. Marathon's playing catch up. Zom stuck around 5 and a bit. Hut 8, Voyager, some of the other crypto plays moving today. Neo moving nicely at 2.71. So still obviously lower than expected despite that beat yesterday. Tesla up 1.43 today. A little bit of a recovery starting in the market of some of the things that have been selling off just in the last 2 days here. And we'll see how this continues. Twitter, Microvision, though, definitely on fire at the moment in terms of getting burned. And Pins also moving slightly higher to about $67 now. Lows, AMD about down 1%. Ubiquity, Teladoc right around 1% again, just a little under. Palantir down 0.69% at 23.21. All right, let's take a peek here again.
A little bit more next quarter. So that was super positive. And you called out advertising. Advertising accelerated for the third quarter in a row. I think it was up almost 80%. AWS and the advertising segments are huge for Amazon's margins. For us, about 80% of the company's operating income is from AWS and advertising. So if you have both of those segments accelerating, it gives them a lot of optionality on the margin, a lot of optionality to make investments in other parts of the business.
All right, we're going to, again, pull off Amazon.
Majority rejection of this kind of racist obscenity. And there is Tim Scott speaking,
Okay, Fox Business going off on race. I think this is a topic for Fox, not Fox Business.
A problem for the stock market and help make the case for a short-term pullback in the U.S. equity market in the months ahead. Joining us now, Amy Will Silverman, RBC Capital Markets Managing Director and Equity Derivatives Strategist. So, Amy, if that's the case from Lori, how do you play that in the options market?
Yeah, it's a great question. And, just one thing I would tag onto that is when you actually look at the earnings moves that were implied by the options and then what actually happens on earnings day, most of these companies are not, they're not beating their implied moves unless it's a move to the downside. So Twitter is a good example of that. So one way to play it, look, is you're selling the upside through calls to fund owning downside, because you're essentially saying if there is going to be a move that beats that option implied move, it's probably going to be on the downside. Why is that? Because expectations have been set up very high, and we're seeing that with stocks not really getting rewarded that much when they do great.
Golly, that's such a great way to put it. I mean, something we've talked about on this channel is almost exactly that, and that's if it's good, nothing really happens. If it's bad, you go in the toilet. It gets really bad.
Inequities that some people would have anticipated given the strength of the numbers. But can you give me the kind of the skew on the pricing? What am I looking at in terms of what I got to pay for downside protection?
Yep, and your commentator earlier actually sort of highlighted this, which is if you look across single stocks, there's not really that much hedging going on. But it is happening broader on an index level. So, we're seeing this activity and hedging pick up in IWM and S&P and in Qs. And what I think is interesting about that is look, guys, 3 months ago, it was all about, growth versus value or vaccine recovery versus the stay-at-home trade. And the market isn't really trading like that anymore. It hasn't been very rotational. It's really been a broad-based pickup in index level hedges across the board, but not on single stocks. I think that's an opportunity there, because when you think about pricing and you think about the fact that some of these earnings, when they do actually beat their implied moves, it's to the downside. That's not being priced into the options yet. So if you're going to own downside, it's probably better to be selective and do it on the single stock level than maybe on the index level where that pickup has happened.
Super interesting, Amy. So I wonder, which stocks can you still do that with? Like, where are the options cheap enough to do it, especially when we're kind of halfway through the earnings season?
Yeah, look, we're obviously through a lot of the kind of mega cap tech names. Some of the late reporters tend to be more on the consumer discretionary and retail side. So, we still have weeks 6 through 8 of earnings. Some of the cruise lines, we actually look at a kind of an implied moves monitor relative to 8-quarter history, still remain inexpensive. Some of the retailers, obviously, I would say the bulk of mega cap tech right now is probably going to continue to decline in vol, given that the earnings catalyst is out of the way.
VIX is at 18. Buy or sell?
It's probably still a sell. And one thing I'll say is, when you look at VIX normalization in the past few markets like 08 and then even back to the internet bubble, it takes a lot longer for it to normalize. This has been the speediest renormalization in the past 30 years. And part of that is because it's been kind of the speediest move up and down because of this pandemic, which really is an unprecedented event. So I think we probably go lower.
Hey, Amy, usually it's a sell and may go away thing. JP Morgan said, as I mentioned earlier, this year you don't want to do that because you want to make sure that the reflation bet's probably going to come back. However, liquidity is going to thin over the summer. Are you noticing any of that starting to be priced in at all? Can you play it?
Yeah, so look, the near-term options have really dropped like a stone, but your term structure, so your future options still remain, kind of, especially in VIX, above 20. It's possible the whole thing comes down. But one thing I would say, and we were actually talking to a client about this, is when you lap the pandemic, there are some things that are going to happen this year that did not happen last year. So for instance, back to school, there was no back to school season last year. This is an event that's coming this year. So when you're looking for ways to play events, you're now getting events that weren't really priced into a 1-year history of options, but are coming back, and people do need to focus on for the summer months.
As our daughters will be very happy to hear. Amy, thanks a lot. Amy was still.
That was good. I mean, that was, I wrote down a few things that I thought were very interesting, particularly how, she believes, I mean, and this is something that, like Ed mentioned, that we talked about, basically good earnings are bad earnings are horrible. And that's just something we're seeing across the market right now. And a lot of it having to do with that uncertainty in the marketplace. Let's go revisit the sticks here, which keep in mind, if you want 2 free stocks using this platform, go to metkevin.com/Webull, deposit $100, and they'll give you 2 free stocks worth up to $1,850. All right, so a lot of sameness here. Microvision recovering a little bit, down just 16% right now, with Twitter down 12.6, Mind Medicine down 4.8. Let's get that interview rescheduled. Got Riot, Marathon, these guys running by 7%, 9.95, almost 10% there respectively. Playboy's up 3.77 again. Neo's now up 3%. Nice trend to the upside here. EXPI up almost 2%. Tesla climbing up at 1.71. Ford 1.39. Lemonade 1%. Dogecoin 31.4. Ethereum 2760. And Bitcoin had a run since we started the stream, and now it's, no, hold on, let's get Bitcoin. There we go. Yep, Bitcoin is continuing. It's over 56,000 now. What a crazy run from 54,400 to over 56,000 in what seems like under an hour here. So really incredible run, especially since we opened quoting Bitcoin prices, and now we're seeing it at 56. Crazy market. Well, I think that about does it for today. We'll be on the hunt for more news and certainly earnings. Well, actually, I don't even know what's reporting earnings today. Let me take a quick peek if we've even got earnings to look forward to today. Sometimes on Fridays, you don't. But whatever does report, we'll be checking out. Okay, yeah, you've got Exxon, AbbVie, Clorox, AstraZeneca, Chevron, Colgate, MGM Growth Properties. All right, so we got some interesting things. L3 Harris from the Space Fund, or that's part of Kathy Wood's Space Fund. Fannie Mae. Okay, all right, interesting. Got some more entertainment coming up later in the day. See how things go. Folks, thank you so very much for being here. And we will... Oh, yeah, these guys report. You're right. I'm sorry. These guys all reported this morning. No, yeah, there's nothing in the after hours. I had it on the AM chart. Thank you for that correction. They all reported in the morning, but there are no earnings in the after hours today. So instead, we'll be doing the market close with no earnings to cover. All right, folks, there you have it. Thank you so much. See you in the next one. Bye.